Chapter 16 PowerPoint lecture. Okay. First of all, everyone's doing well. Make sure to be giving your assignments. As always, if you ever have any questions or comments, always come see me. Okay, today we're talking about process costing. Remember, last class we talked about job order costing. Today we're talking about process costing. Yeah, process is very different from job order. Job order was specific items, individually done, such as houses, building. Those are individually done for someone. You get something custom made, jewelry. Process, It's all for identical low-cost items. Think about sodas, for example. They're all made the same. They make millions a day. Look at certain other things, such as we talk about, say pencils, pens. They're all made the same. They make, companies like that make millions a day. Again, the whole point of this is they're mass-produced, and again, since cost cannot be directly traced, it's very hard to trace. Okay, how much did it cost to make each individual soda? Each pen. You take an estimate, but in the meantime, it's very difficult to trace each one. And the big thing is repetitive processes. People just go there every day, say, okay, time to make a batch of pens, a batch of sodas. Again, but these doesn't change. So you have direct materials, direct labor, and overhead to each completion. Again, job order cost system, job we talked about. It's all individual custom products. They're very different. Process, nope, individual process, they're all the same. We make millions a day possibly. Things are very standardized. Again, different things here for need to know. Again here, EUP, remember equivalent units production as we calculate the work in process account. Because the process is, like I said, we're going to focus more on process now, not per each job. So it says here, multiply each percentage. Okay, for materials conversion costs, how much are we doing for each one? The weighted average versus FIFO. Average cost. Again, Gen X here uses a weighted average cost flow. You want to follow these 4 steps, okay? Let's go over each step now. Okay, first of all, here's a good example one. A coffee company, for example. It starts at the beginning. The employees enters and it comes in for an entrance. Okay, start with, let's say, with roasting. The roasting department. Okay, coffee gets roasted. The beans, blending, up until it's ready to go. Okay, and again here, look for certain things here. Your beginning work in process inventory, your materials costs, your conversion costs, the cost during the period. Okay, so the first step, determine the physical flow of units. What are we going to do here? Obviously, got to account for all of them. Make sure none are missing. Reconcile. What was our beginning work in process? How much did we start this period? Complete your EUP, equivalent units of production. All right, how many do we have here? How much goes to direct materials for? In this case, it's for each department here, each process. In this case, it's roasted. How much direct materials we have? How much conversion? Again, look at if it's a need to know here. Take a look at our balances here for each one. Next part, what's our cost per equivalent unit? Here it says, okay, for direct materials, each time is $3. For conversion, it's $4.02 here. Again here, it gives you a good cost. How much is per each EU here, equivalent unit? Assign and reconcile costs. Now it's going from roasting, transfer to blending. Because remember, it's a process. Get the coffee out. From roasting and blending. Again, need to know here. Follow the balances. What is our balance? What is our cost per equivalent unit? Okay, again, look at the summary report here. It takes everything into account. Costs, from production, from our units. Again, up to our reconciliation. Again, here, our cost data for the month. Again, it says right here, what do we have here? We have raw materials, work in process. Again, if you notice, we're splitting it up. We don't know before. So, okay, here's for the job and job order. It's a little bit different now because each one is per each, in this case, each department, each area. One's roasting, one's blending. That's fine. And of course, our last part, overhead, that goes for all of them. Yeah, let's fill out the flow of material. We say when you first acquire materials, it's still going to be an asset. So you want to debit inventory, credit your liability, your accounts payable. Okay, next bar says assign a direct materials cost used in production. Well, again, if you notice right here, per each one here, we're not just saying all forces. Okay, it says here one, debit the work in process for roasting, one for blending. Again here, how much did they use up? And the last part, record any direct materials used. Remember, that's all going to be overhead. And again, we have all these materials, but in the meantime, you got to have your labor. Who's going to make all these materials together? Obviously, it says right here, start the wages payable. And again, if he knows, it's per department. How much goes to roasting, how much goes to blending. And then our factory overhead, indirect labor. Remember, that's for everyone. Let's say janitors, supervisors. What's the last part? Well, you got to pay your employees. You want to debit the liability to decrease it, and you want to credit cash because cash is also going down. Overhead costs now. Last part, the overhead costs. So we got factory overhead. We talked about earlier. Everything else you need to make return the company. Think about what goes on inside that warehouse. You got to have obviously utilities, insurance. And last part, your applied overhead. Like it says here, whatever direct labor is, multiply by 1.2, 120%. Again, you get your overhead right here. Start with your estimated overhead cost. Divide by your base. So it says $20 per machine hour. So how many machine hours we used. We got to apply that overhead, $7,500. Again, you want debit work in process, credit factory overhead. And the last part, what are your actual overhead costs? Again, finished goods. Now, again, if you notice transfers, whenever you're transferring one, you want to, in this case, when you credit inventory, that one's going down, the one's being transferred from, and you want to debit the one's going to because that one's being increased. Again, transfer completed goods now. Again, from work in process blending, the last step is finished goods. And then when you sell it, you want debit cost of goods sold and credit finished goods because leaving finished goods and it's becoming a cost of goods sold because, well, now it's sold. It's an expense. Again, some trends we talked about earlier. Yeah, and a hybrid system kind of has a little bit of everything here, kind of both. Again here, same thing with the FIFO method. So it's okay, we have our beginning work in process. How many units do we have? Again, just like we did earlier, follow the same step. Determine physical flow of units. The EUP. Okay, looks so neat to know. Again, work in process units. Those are total units, ending units. And you got transferred out. Those are beginning units. Okay, and again here, we get the balance for each one. The last part, outside, so it could be a cost recordment unit. We assign and reconcile costs, just like we did earlier. Okay, question? Okay, class. I wasn't doing well. Let me know if anyone has any questions, okay? Thank you.